how does best-in-class B2B commerce really look like between the buyers and the suppliers?
Looking ahead 3 to 5 years, I believe that best-in-class B2B commerce will probably feel effortless, something that happens in the back, but it becomes radically more predictable for suppliers.
In our work, it's the time to shine for the likes of TreviPay and other B2B payment enablers, where you guys have been solving these problems and they're finally starting to be recognized more and more by retailers and other non-traditional B2B verticals.
People are skipping over the part, like, do they have the right data? The data that you're sitting on as a retailer or a manufacturer or a government has an awful lot of value. Data really is the currency for a lot of this.
Credit decisions, invoicing, payment, reconciliation, different systems make the whole process a little clunky. For me, it's really stitching the whole process together. That's the real next transformation.
This is Fintech Conversations with Flagship, a podcast production by Flagship Advisory Partners. Today, we are diving into the world of B2B, aka business-to-business payments, specifically pay-by-invoice. Now, pay-by-invoice may be a term most of you are not familiar with, but actually it's a concept most of you are familiar with. For any of my business owners out there, if you have ever manually made an invoice, sent it to another business, waited 30 or more days to get it paid, and then spent an afternoon chasing down that payment, you already understand the core problem. For most companies, buying and selling from each other still looks a lot like it did 20 years ago. Manual invoices, disconnected systems, slow credit approvals, and a lot of manually typing numbers in between. However, that is starting to change. In this episode, we dig into why B2B commerce is finally hitting an inflection point and what it's going to take to modernize it. We cover why some of the largest retailers like Walmart are starting to implement pay-by-invoice, how the US and Europe are solving the same problem but from slightly different angles, and of course, where AI fits into all of this.
Hello everyone and welcome. I am Mascetti, a principal at Flagship Advisory Partners based here in our US office in the Washington, D.C. area. I'm joined today by my colleague and counterpart, Charlotte Usta, also a principal at Flagship based in our Amsterdam office. And we are very pleased to be joined by two leaders from TreviPay, Bonde, Chief Marketing Officer, and Inez Berkhof-Hollander, Vice President of EMEA. Together with their incredible teams at TreviPay, they bring deep expertise at the intersection of B2B payments, marketing, and digital transformation across the US and Europe. Thank you both, and Charlotte, for you all being here today.
Great to be here.
Thank you.
Yeah, looking forward to the discussion with Alan and Inez.
So today with that, today's going to be a very B2B heavy conversation. We'll cover several topics, including why B2B commerce is hitting an inflection point in the US and Europe, but from slightly two different angles. Why B2B pay-by-invoice is becoming a key enabler of broader order-to-cash automation, and our collective views on what best-in-class B2B commerce could look like over the next couple of years, particularly in a world driven by AI automation, agentic commerce, and new payment rails. You will also hear us mention a few themes from our recent white paper that we co-authored, titled Opportunities to Digitize B2B Commerce with Pay-by-Invoice and the Automation Flywheel, which is available for download on TreviPay's website. So just to set the stage, Charlotte and I will go back and forth, Alan and Inez, in terms of us asking questions. But to kick things off, let's start with a question for you, Alan. So TreviPay sits at the center of the US B2B commerce modernization effort, currently helping enterprise sellers digitize invoicing, net terms, and order-to-cash workflows. From your perspective, why is the US market finally reaching an inflection point now after years of slow digitization?
So this is like a little history lesson, right? That this is not a new journey, but you could say that the pace has increased. And I think this is the root of like what's driving this behavior now, and sort of a mix of macro things and I guess selfish things for brands. But I'd say boil it down, there's kind of two forces that I see. One is we're always driving for more efficiency, right? And the benefits of automation. And a lot of this is kind of coming to the fore in the current economic environment, right? When there's economic stress, people looking for more efficiency, and are there opportunities to automate, say, different parts of the order to cash process that people just haven't had the urgency to do? And I would actually put AI in this bucket, by the way, because AI is a form of automation in a lot of cases. I also think there's the sort of shift or increasing shift towards, like in manufacturing, more direct to consumer style models. And you and I both know that marketplaces have been sort of in the background of a lot of this, and that's moving to the foreground. So I think that's one. The other one is just how can we create more growth opportunities broadly, whether you're a manufacturer, a travel company, or a retailer, and how can you gain more share of wallet of the customers that are already engaging with you? And you look at retail, right? In the study that we did with you, we focused specifically on retail, and there's a shocking amount of retailers that are kind of in denial that they have corporate buyers, and often we challenge them to sort of look for those corporate buyers within the checkout data. And it turns out that they have them, whether they're treating them separately or not. And so I think that as retailers, especially, and others, are focusing on capturing more of that corporate spend and also doing the things they haven't necessarily done to optimize their digital channels, well, pay by invoice kind of fits into this discussion. And also, it's ultimately about doing things more efficiently and capturing more spend and creating loyalty. And we think there's a lot of opportunities at that intersection. So I think it's happening now because macro trends are forcing people to, and micro trends are sort of reminding people that, hey, we could do a better job helping our customers buy more stuff.
No, completely agree. And yeah, it's funny you mentioned the study that we had done, because it was amazing to see how many of the top retailers, when you think of brands, particularly in the NRF top 50, how many just forget having specific tools in place, just not having a broader buyer portal for some of their business clients to shop through, right? To create that new experience. It was quite eye-opening. It wasn't something I expected going in, but certainly interesting to find out. And perhaps Alan, you mentioned a lot of different pockets, within different industries or different parts of the order to cash flow. Where do you see the largest opportunity to drive, the next wave of automation and transformation? Because there are so many subsegments, right? So for those that have a very industry focused view or a workflow focused view, like what are those biggest opportunities that you see in your role?
Oh, me or Inez?
This one would be for you, Alan, actually.
All right.
But Inez, you could also kick us off.
Yeah, I'm
Happy.
going to bounce this over to Inez because I know that she's seen this, the diversity of the use cases, especially in the European market. There's a lot more variety, I would say, in Europe, and some of that's going to flow over to the US.
I'm glad you say that, Ellen. So sometimes we are apparently a little bit ahead of the US in some instances. So the way I would see this, Rom, is that I mean it's not that Europe hasn't thought about digitizing the order to cash process. I do believe that pieces of the order to cash process have been optimized over the past years. Being influenced or driven by regulations or not. But think about, the whole e-invoicing equation, and I'm sure we'll get to speak about that a little more down the line. But that is definitely a piece that must be digitalized and has been digitalized over the past years already. But also the whole payments equation, right? Instant payments, SEPA payments. I believe the whole payments equation in Europe is also a little bit more advanced already than probably in the US. But I think the real transformation really comes from stitching it all together. It's the overall end-to-end process, if you will. And I'll tell you why. Because, I mean, if you think about how European businesses at least manage the order to cash process today, there's still manual steps, let's say, that move from one to another. So credit decisions, even if they may be taken, in a digital fashion, right? It's a separate instance. It's not part of an overall digitalized experience, if you will, right? Invoicing happening in a different system, right? So again, different systems make the whole process a little clunky. Right? Payments, again, is something different, right? Then reconciliation, another step, right? Often another process or another piece of the puzzle. So for me, it's really stitching the whole process together. That's the real next transformation, in my opinion.
Yeah, and I think, Inez, you mentioned like a good point. And I think it's like the question that everyone loves in the market is like, How is basically the opportunity similar as to what we observe in the US, but at the same time, how is it different in Europe? So would love if you can also describe a little bit like, the similarities of the opportunity between the two regions, but also the constraints that you would see and how that opportunity is effectively different.
Well, I think Rom alluded to it already, Charlotte. I mean, Europe is really very much regulatory driven, let's say, right? The European Commission is coming up with directions that basically companies have to abide by, and that drives the whole digitalization, which is not a bad thing. In my opinion, it drives companies to think about how do I do this in the most efficient way. Compliance really matters. If you and now I'm going a layer deeper a little bit. If you think about countries like Germany, right, really culturally focused on first time right, very very thorough in how they do things. Compliance really matters. So yeah, if then you put that in the light of the European Commission and the direction that's been given by the European Commission, then you can see why countries such as Germany is heavily focused on compliance and use that as a lever or as a trigger, basically, to start and optimize the digitization of the order to cash process.
Yeah, no, I fully agree. I think, like Europe, one of the key elements that we see versus the US is obviously it's such a fragmented market, right? And you also like touched upon that. You have like different languages, different tax systems, right? So localization is a key point here. And then again, like, e-invoicing regulation, as you mentioned, is really kind of powering the advancement here. But again, like, it's also like different rules on e-invoicing, on the reporting, on data. So obviously, like, makes everything a bit more complex and also legally different. So if you compare like Europe to the US, where do you see in Europe specifically like the largest opportunities today?
Yeah, I would say if you compare US and Europe for a minute, I think both regions are striving for the same thing, right? They're trying to solve the same problem, how to digitize B2B trade, let's say, in a way that improves cash flow and reduces risks and scales relationship. I believe the contrast is in what is driving that transformation, and Europe really rewards, let's say, platforms that can absorb that complexity and automates compliance. To your point, making sure that the local and cultural aspects are taken care of, and I believe that's where most of the focus and the biggest opportunity lies. And again, coming back to my first point, stitching that together with the overall order to cash experience, not making it a standalone thing, because then it's still not an optimal process, right? So basically making sure that the compliance thing is taken care of, but within the overall order to cash end-to-end process, and making that a smoother experience.
I mean, one thing I might add is, going back to sort of the spirit of the question, is there's different, I guess, roads or ramps to this next wave of automation. And it's, to oversimplify, I think there's the process lane and sort of seeing the world through these processes that are disconnected, and looking to link them together, and sometimes informed by the regulatory environment. And then there's more kind of the data approach, which is, let's not think about the process yet, but let's look for the insights that can inform where to focus, or what, ultimately, what do our buyers need, like functionally, to do their job, or to produce the widgets that they're building, or to keep the trucks on the road? What do they want in terms of the experience, and what creates that loyalty? And then what are their expectations in terms of technology as a lever that they're maybe even struggling with themselves? Like, how does AI fit into this? We'll talk, I'm sure, about AI, but ultimately, I would recommend that it starts with looking at the data that you have, and the insights that you have, and what data you have control over, and what data you need. And that unlocks, putting on my old consultant's hat, I mean, that follow the data, whether it's survey data or transactional data or other types of subjective data or verbatims. And if you have if you have a good handle on the data that you have and need, then you have a foundation to talk about process and talk about automation. And then, of course, if you're building AI models, they need data as well. So I think people are missing, in a lot of ways, the bigger discussion about the threats or the opportunities from AI, and people are skipping over the part like, do they have the right data? And sorry, but you're not going to get all the data you need from chat or from Claude or from whatever, which is just a regurgitated version of other public data. I think people are missing the fact that the data that you're sitting on as a retailer or a manufacturer or a government has an awful lot of value, not only to inform decisions, but also potentially to train AI models. So I think there's this undercurrent that data really is the currency for a lot of this, but people sort of skipped that spot or skipped that step in some ways when they're talking about AI going to change the world. What's like, if you have the data, it might. And who has that data? And can you trade that data for other data? I think there's a really interesting undercurrent here that is informing this whole discussion.
Yeah, I actually, it's funny you started to pick on the data point because I mean we talked about this a bit in the white paper that we published together, but when you boil down what we see in our surveys with small and mid market businesses in terms of the pain points or the most common friction points that they see in the order to cash process, it's really four things. And you could argue it's all data related: manual data entry, so naturally data related, right? Limited payment visibility, right? It's not so much when the payment's going to hit my account or it's not actually a cash flow issue, but it's just understanding where it sits in the process. Am I receiving this on a T+1, T+3, T+7 basis? That transparency and data transmission plays core to that. The third is overall dispute resolution delays that we hear about, right? And so there's so much disputing that will go on between buyer and supplier in a given year. That's very much a data-driven process that has nothing to do with payments, nothing to do with financial services. It's about figuring out what's the right final invoice amount to actually being paid, and how do you transmit those responses back and forth to get to an agreed upon outcome. And then the fourth is just inflexible credit processes. At the end of the day, the credit lines exist, but how you actually exchange data to get set up on that credit product, whether that be trade credit, whether that be a card product, those tend to be the four main areas. And all of that is data driven. It's where a lot of businesses sit on a lot of data. And so I think it underpins the fact that, as we talk about a lot of differences here, those are four things I think across the US and across Europe are highly relevant. The other thing I wanted to quickly touch on, given the fact that we're focused very much here on the O2C side, so very much from the supplier, the merchant perspective, but thinking about the AP side of the equation, right? Because we have buyers and procurement offices that equally want to automate these process and workflows, whether they're being given the tools by the supplier or whether they have their own. And Mineral Tree does a really interesting, kind of state of the market every year. And in their most recent AP survey, they still find that there's still only 1 in 5 businesses that have fully automated their AP workflows. So thinking about the AR side, if we even draw a tangent, right, you're talking about an 80% greenfield opportunity for automation within the AP side, similar on the AR side, and that 80% of those businesses are thinking about automation next, right? And what do they try to automate? It might not be the full end-to-end process, but something. So it just clearly points out that there's still huge greenfield, at least within the US, as I'm quoting stats, but still so much opportunity and actual interest from these companies. So companies like TreviPay, super well positioned to sort of catch companies at the right time.
I mean, the last point I'll make on that, and it's come up in the discussions we've had with advisors for the next Crossroads event. See that little plug there, is to focus, make sure you're mindful of the upstream. This is the words of a large global retailer. Focus on the upstream and downstream impacts of the problem that you're trying to solve. And in simple terms, this means that even if you're focusing on the AR side, the other side of that is AP, right? So it's like it can't happen in a vacuum. And I think it's really good advice. And I keep on thinking of that metaphor as like what you do impacts things upstream and downstream. And what happens sort of after, the product ships and after the customer consumes it informs the next buying cycle. I mean, it's all connected. And I think that's why, it is process, but also it's about the data behind the process. And even just the examples you're giving, like there's clues of where you should focus just in the data points that you just mentioned, right? These gaps between sort of desire to automate and what's really automated and ready to be automated, like ignore those at your peril, right? You can't wishfully sort of go into automation and all the endpoints aren't ready to accept that automation.
No,
If I
completely
may
agree.
chime in on that, Alan, I really like what you just said, because optimization is quite often seen as a goal, which is fine to a certain extent, but to your point, it's also a mean. And what I mean by that is, if you do it well, and it's a good thing for the supplier and a good thing for the buyer, right? That's where the magic happens, and that's where, as we call it, where the loyalty comes from, right? And that's really where we also see a lot of benefit in the optimization of order to cash, not just coming in from a seller perspective, but also looking at the positive impact it should have on the buyer, right? That's where the magic happens.
And it's a flywheel, right? I mean, sort of word of the day, right? It breeds additional interest and activity that creates more automation, which creates more excitement, which creates more, right? Ultimately, we're tying that automation to loyalty, right? That's the end of the game. I mean, everybody wants share of wallet, but also you want ultimately, loyal customers. And if their interests are mutually aligned with yours when it comes to automation, bingo. Like, hey, can I order through my Coupa and there's a punch out to, the merchant system? Well, I'm going to place most of my orders through that because procurement managers are going to insist on it. So I think it just creates these flywheels where it's not by accident that you consolidate your spend, right? There's the share of wallet, which is it's because you meet both the needs and the wants of those procurement officers and everybody who's buying stuff every day. It's like, I want this, but I need this. I can't buy from you unless I get an invoice with all these fields and you push it directly into my accounting system. Like it's a non-starter if you can't do that.
Yeah, perhaps, Alan, just to follow up on that, there was also like an additional UK survey that actually estimated that like on average, one person would spend like, about 4 hours per week to literally just like reconcile the different invoices. And when you actually like think about that number, I mean, like that's pretty huge. And so I think like, the kind of disruption opportunity is just like at the beginning, and it's about time. So I think indeed, like, AI powered by data is going to like, accelerate everything. And then in Europe specifically, also the regulation part, of course.
100%.
So because I think we've covered most of our like fintech buzzword bingo card up to this point. I think we've hit a lot of the big ones, but one that we have not hit yet, Alan, which I know sits near and dear to your heart, is the pay by invoice. So we actually haven't mentioned that yet. So if I would have bet 20 minutes into the podcast that we didn't say pay by invoice once, I would have bet wrong probably.
Oh, we could
But
just say it several times right now.
yeah, there we go. So now I'm gonna get it in now. But joking aside, of course that was a big part of our white paper as well. And let's maybe double click there for a second. So why should pay by invoice be viewed less as a payment method as we've would typically think about it, and more as an automation enabler, and maybe expanding a bit more on that flywheel effect that we were just hinting at?
So I think we just hinted at it, right? That it is at the simplest sort of end of the spectrum. It is a payment option, and buyers are asking for it by name, or asking for net terms, or asking for synonyms. And I think that's really essential just to create, you saw this in your research, that there's this strong correlation that when there's a purposeful focus on business buyers, when there's business programs and business portals, that this is a necessary ingredient, but not every merchant has those business programs. So sort of the light bulb has to go on, like, oh, we do want to grow our corporate business. And so they need these certain services, but it's a necessary condition. And so I think it does start with viewing it as a payment option. And speaking of surveys, right, in surveys that we've done, right, that 80% of corporate buyers view the ability to pay with their preferred method, they express it that way, as a reason to choose a supplier. So that's a huge, if you don't allow people to buy the way they want to or need to buy, they can't do business with you. So it starts there, but then it's about all the back office connectivity. It's back to the upstream and downstream. So, custom invoicing or e-invoicing or purchase controls or integration back to the upstream and downstream. That also comes up in a lot of different surveys that we've seen, especially this need to integrate and make it just part of your process. The other thing that's interesting is this does depend on the size of the purchasing organization because that complexity comes from the biggest buyers. We tend to focus on global sellers with big global buyers. If you go downstream, some of these requirements become less, the more that the corporate buyers kind of feel like prosumer or consumers, then they are putting more of the spend on cards. And I think that's where integration and choice of payments it becomes more relaxed. But if you're dealing with big corporate buyers, especially across different regions, I don't think you can do business without a lot of this. And then it becomes the automation play. And then it becomes sort of, hey, let's look at the order to cash cycle and let us help you as a seller, dear buyer, do some of those things that are on your wish list. And I think it takes a village to do this, but I think this is really pay by invoice is the starting point, but it's not the ending point. And the value winds up accreting all up and down the value chain. And I think business, and you saw this, right? Retailers are an interesting lot, right? If I divide the world into two types of companies who are tackling this, there's traditional B2B players like manufacturers or distributors who've always done this. They would say, wait a minute, pay by invoice, like everybody needs to be paying on invoice or paying on account or paying on terms. And the challenge for them is how to do that more smartly and automate and apply AI and look at their data. And it's a transformation challenge. If you flip over to an area like retail where the adoption is still kind of mixed, it's just a growth and expansion thing. Because it's hard to say that, hey, we want to help you do your AR better if they haven't done AR this way. So I think that's how we kind of view the world as retailers. This is almost all upside, and mostly it's a growth opportunity. For a manufacturer, it's all efficiency and automation and doing things they've always done just better. And I think it's helpful to think of the world, even though that's kind of binary, retailers fit in a different category than most of the manufacturers that we work with. They're just starting at different places.
Yeah, if I may chime in here from a European perspective, I'm not sure, but I believe in Europe even more pay by invoice is the norm. We don't use credit cards for B2B payments except for, the travel industry probably. So in that regard, I believe B2B pay by invoice, let's say, shouldn't be viewed as a payment method because it doesn't sit at the end of the transaction. It's not just a checkout kind of thing. It just fundamentally shapes everything that happens before and after the invoice is issued. So it's truly, an automation layer across the entire order to cash workflow. That's really how it is viewed in Europe. And believe it or not, I fully agree with you, Alan, that, in retail, it's viewed a little different and the opportunity is probably more growth oriented because retail is not very familiar with offering net terms or pay by invoice, and the manufacturing world probably is, but you would be surprised. I was at an event last week in Germany with purely manufacturers. And the level of risk averseness, if that's a word, that's really where those companies struggle. They can't grow as fast as they want to because they are risk averse. So I give you a concrete example. It takes them, 5 to 7 days to onboard a customer, right? And I get that because if you're risk averse, you want to make sure that you check and triple check, the company that you do business with, and then even still, how much is the credit line that you're willing to provide, right? Well, that's 5 or 7 days lost business or lost opportunity, right? So I found that fascinating. And then there was another lady that said, we just put an e-commerce channel up in the air, and she was super excited about it. But yeah, we don't know how to add new customers to that because, oh my gosh, those are unknown buyers. We don't know how to do underwriting. So the very start of the process is probably immediately a question about how do I offer pay by invoice, and really many manufacturing companies even don't know how to do that, especially not in a digital world. So Yeah, and then pay by invoice in again coming back to the regulation, right? Is basically equals the e-invoicing regulation, right? It's not just issuing an invoice, but it needs to be a compliant invoice. So yeah, that's from a European perspective, probably my view on pay by invoice and why it matters so much.
And maybe one thing to add on that towards the end of Alan, your conversation or your response, and Inez, as you were just talking now, Charlotte and I spend a lot of our time, probably other half of our time, when we're not thinking about B2B payments and like the traditional C2B commerce world. And what I find interesting is, with all of our time working with PSPs and merchant acquirers and card enablers, they've always thought of B2B as, up until recently, as this sort of box of verticals, right? And thinking about them all in one homogenous way, and not so much thinking about them as its own distinct strategy. And so as we think about those that are enabling just broader payment acceptance, bucketing B2B into this cohort is actually in many ways let retail and what they would thought of as C2B payment acceptance use cases, traditional retail, restaurant, hospitality, the needs of their B2B buyers very much go to the wayside. And so what we're starting to experience more in our work is one, of course, like it's the time to shine for the likes of TreviPay and other B2B payment enablers, right? Where you guys have been solving these problems and they're finally starting to be recognized more and more by retailers and other non-traditional B2B verticals. But then in the broader payment acceptance world, these C2B enablers also recognizing, wow, we need to be providing better service to B2B buyers, and how do we form partnerships with those B2B fintechs that are already solving these problems. So it's a really interesting kind of intersection of the world where we're seeing those that have really spent their time solving for consumer payment needs finally all transitioning into this kind of B2B focus.
Well, this is the point: is there's an awful lot of B2B that's not cardable, like
Right.
90+% of it, and whether you're a bank or a card, there's an awful lot of momentum to crack that code and make that 90+% still kind of in the flow, even if it's not going to be put on a card. And I think that the last point that I'll mention, I'm glad you brought it up, is increasingly it's not one versus the other, but and we know this from the travel space, there's an awful lot of spend on virtual cards, and there's a hunger to sort of have other alternatives. And whether you view it as just a payment method or a full end-to-end automation opportunity, it kind of doesn't matter as long as you're recognizing that there's volume that's not going on cards, and there's demand by both buyers and sellers to have other types of programs that allow people to like buy the way that they need to buy, but then create all that downstream benefit in terms of all the different variability in terms of custom data fields and integration into payment systems. It's like however you start, it winds up being an end-to-end transformation, but it's really hard to sell. We all know that it's hard to sell a end-to-end transformation. You got to solve some specific problems first that give you the right to sort of work on the adjacent problems. So I don't mind if people think of pay by invoice as a payment method, which gets them into the discussion of all the other things that they can do that allows corporate buyers to have a better experience, which bingo, they buy more when you make it easier. Turns out.
So to wrap up, I think if we're looking ahead, like 3 to 5 years, what do you think, or like how does best-in-class B2B commerce really look like between the buyers and the suppliers? And Inez, I would perhaps just hand it off to you for the first response here.
Sure. Gosh, looking ahead 3 to 5 years, I believe that best in class B2B commerce will probably feel effortless, if that makes sense. So it's something that happens in the back, and but it's not really visible or noticeable. And also it becomes radically more predictable for suppliers. Right, supported by AI probably, but also driven by humans. So it's still AI, the data that is helping AI to be more effective, more efficient. But the humans are still there to maintain the relationships that we all need in B2B trade. I believe that buyers will transact on trusted and pre-approved terms that adapt automatically, for example, to their behavior. But also suppliers having real-time visibility into risk and cash flow and exposure, without having real manual intervention. So yeah, there's a lot. I believe in 3 to 5 years that's going to happen, both on the digitalization and how people are more effective and more efficient, if that makes sense. And I think that ultimately agentic commerce, for example, will automate routine decisions, and humans can stay, firmly in the loop for that matter, setting strategy and exceptions and, again, the commercial relationships that matter most, right? But yeah, the winners won't be the most automated companies probably, but I would say the ones that combine automation with human judgment and using technology to scale trust, not replace it. That would be my 2 cents.
Yeah, fully agree here. And perhaps I think you already touched up agentic commerce, and that's obviously a word that is highly associated in the context of B2B commerce. And perhaps, Alan, for you, the question as it comes to what is best in class effectively looks like, and what's your perspective around stable coins, agentic commerce, and that specific context as well.
So I love, Inez, your point of radically more predictable. I think this is what a lot of merchants and buyers, they're looking for more predictability, right? You look at the macro environment and, tariffs are set today and then they disappear tomorrow and then they come back and there's a lot of uncertainty, but I think this notion of radically more predictable is a pretty nice vision, right? And it builds on trust. I think that's, there's some good articles now being written about this sort of, are you going to lose that trust element when you take on more AI? And certainly if you don't do it properly, you will. One point on stablecoin, I think that's coming quickly. We haven't seen that demand within our network over the last couple of years, but we're now seeing it in certain sectors. We're working on a solution right now, so that will be part of the sort of the portfolio. So I think that's, watch that space. I've been kind of a late adopter of all things crypto, but I can see that stablecoin feels like the right mix of kind of Wild West and, backing a bank or something like that. So it really feels like the right type of solution. It's the time for that. Second, I'm going to take sort of a contrarian view against agentic, that I think there's going to be more backlash against everything agentic. And this is as an old AI guy that was doing this before people were, there was a hype cycle back then, but this AI isn't new. How people apply it and the compute and the data is new. So I think that the future is going to be this balance. I think, as you hinted at it, where people apply AI and agentic in certain parts of the process and certain parts of how they interact, but especially like in high touch businesses, and what traditional B2B businesses aren't high touch and built on trust and having a person that you trust. I think that trust starts with, talking to your favorite rep or your favorite support person. And if you think that you're going to automate that out of the equation, I think that's a mistake. But giving them tools that allow them to have a more fulfilling, more complete conversation with their seller counterpart, I think that is smart. So I think that we have to make sure we have that balance, and then we can't lose track of that even as we look for more places to apply AI. So I think if you start with trust, you start with the relationship, you balance experience with automation. There's so many wonderful ways you can apply AI, but if you try to use AI to cut the people out of the equation, I think that's a mistake.
Maybe if I could add one more point before I think we wrap up. I mean, I think our view on AI and B2B agentic commerce is probably a lot of what you guys just described. I think it's less about just purely replacing humans and more so about accelerating workflows. So we think of agentic AI from a very much, yes, improving the buyer supplier experience, but there's just a lot that goes on in the background with these tools that I think just naturally breed some upside and excitement, not just for corporates implementing the solutions, but those providing them. So things like instant credit decisioning. How can an agent help at least start pull information together, maybe not making the decision, right? Again, to a little bit of a murky gray area when they're making final credit decisions, but how it can pull that information together faster. How can disputes be classified in a more streamlined manner, right? Talking about back in the beginning, the pain points that we discussed that we hear all the time in the survey work that we do, how you can have more predictive and high accuracy cash application processes, right? Using an AI agent or a bot in the background that can start to lay out a lot of that logic. I think there's a lot of good applications for the tools, but I do think at the end of the day, the human element can't be replaced. Whether it's the actual buyer supplier experience, there needs to be a human, I think, in the middle there, because it's particularly in the B2B space, it's so relationship driven. But also, I think at the end of the day, there's still, particularly on the procurement side, a human that wants to have that final decision. Fully turning that over to a bot or to somebody else or to a kind of algorithm, I just don't think has that long-term sticking point. That's at least my 2 cents view. And maybe the last thing I'll mention is just around, so we're talking a lot about automation. We're talking about kind of the end of the road, fully autonomous, all these things being streamlined. But I think a point that we make in the white paper that turned out, even as we've had people giving us reactions to it to be quite positive, is that this automation journey doesn't take place overnight. So there's companies out there that may have zero automation in place. And we're not necessarily saying that tomorrow, for you to be an effective back office, you need, the entire order to cash streamline. You need to cut everybody out of the workflow. Like, that's just not realistic. And so at the end of the white paper, we talk about a maturity model where you get off of paper and ad hoc processes. Maybe you're starting with just embedded pay-by-invoice as your first product, right? Or some sort of e-invoicing automation solution, right? Particularly if you're sitting in Europe and now, regulation demands it. I think there's a lot of places where automation can start, whether it's with some of the products we've talked about here, but I think it's important for corporates to understand that, like, there's a lot of companies solving for this automation journey, and that wherever you're at in the process, there is sort of quick wins that you can put in place to make your life infinitely easier.
Yeah, I would add maybe one more thing on this one. I think it's also critical to assess what are your core capabilities in this regard, right? Because it rapidly becomes, the sky's the limit, but at the same time, we all know that, resources are limited, right? So I think it's important to realize, what are your core capabilities and where can you have quick wins and reach those quick wins yourselves, right? And where do you potentially need a partner, or where are you better off leveraging third parties basically helping you out in the entire process? And it can be a mix and match, right?
I guess my last point is transformation takes time, right? Whether it's digital transformation, whether it is other, go back 25 years, sort of the dot-com transformation, it takes time. And so I think that having frameworks like, I love maturity models because it's a wayfinding device, but also there's a next step no matter where you are in that maturity framework. And you can solve a lot of problems even while you're working towards a bigger transformation goal. And I think that's the pragmatic approach is, talk to your customers, look at the data, see what bottlenecks really are sort of creating friction. And however you solve them, at least start talking about them. And some of those are going to be process things, some are going to be data things, some are going to be agentic things, even while you're looking sort of to the mid horizon to be more transformative. But you can't just say, hey, we're going to transform this whole thing. It's impossible to do that all at once. But you can solve a lot of little problems along the way. And I think that's how, having worn a consultant's hat, that's how you get to the next stage, is show that you can progress from maturity level to the next one. Don't just try to jump to the end. And I think that makes sense, but there's a lot of urgency to do AI, and I think that's the wrong approach. The wrong approach is like, what problem are you trying to solve? And to Inez's point, what capabilities do you have to actually solve that problem more with people than with technology, or maybe not? But I think that sort of thoughtful approach, and I encourage everybody who's interested, look at that maturity model, because there's both guidance in it, but there should be comfort in it as well, which is, one, it's not too late, and two, you don't have to be like best in class, you just have to be a little bit better than your competitor.
I think perhaps, Alan, just just to react on what you just said, and very true, obviously, I think you also have increasingly like a really good set of case studies in the market, right? And so oftentimes it's also like, looking at what others are doing, across like, other regions just like helps to reinforce. And again, I think like, we have a lot of buzzwords in the market, like, stable coins and AI and this and that. And I think like, looking in what it effectively results in, like, something relatively concrete also like helps, the market disruption. So I think like, that's definitely kind of disruption that we're seeing to accelerate across both geos. So I think it's really exciting.
It's an interesting time to be in this business, no doubt.
And I think that's a perfect spot for us to maybe wrap up here. So this has been a fantastic conversation, and we've covered a lot of ground. I would say if listeners to this are taking anything away, it's that, at least to me, B2B commerce is clearly entering kind of a new era where payments and credit and invoicing and workflows are converging into, as we've discussed, kind of a seamless automated infrastructure between buyers and suppliers. At least that is if, you're implementing everything, and you falling in the later stages of that maturity curve that we were just discussing. If anyone wants to continue the conversation in person, TreviPay actually has, and here's a shameless plug for you, Alan, an upcoming Crossroads conference, which is a great opportunity to hear directly from industry leaders, connect with peers, and dig deeper into where B2B payments and commerce are headed next. Flagship will be there at the event, sharing more from both the research that we've discussed here, as well as some of the stuff from our website and some of our more recent insights that we publish on our website about B2B commerce and payables and receivables and the like. With that, Alan and Inez, thank you both again for joining us. And Charlotte, thanks as always for tag teaming this conversation with me. And to everyone listening, we'll see you next time.
Thank you, Inez and Alan, for joining us today. There was a lot of great insights, but the key takeaway is really simple. B2B is overdue for a transformation. The tools are here, and the companies that move will pull ahead of those that don't. For more data and research or the full report that we mentioned, visit us at flagshipadvisorypartners.com. Thanks for listening, and see you next time.